You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuikStrike, options pricing and analysis software. QuikStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuikStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuikStrike is the perfect addition to your trading toolkit. Learn more about QuikStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuikStrike1. That's QuikStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome back to TWIFO. This Week in Futures Options, a program where, as the name implies, we break down all of the fun stuff going on in the world of futures options. Could be equity indices, could be ags, could be crude, could be metals, could be all of the above. Swirl it all together. Maybe some dairy. You never know what's going to make it onto the show. Some crypto. That's why you got to tune in every week and check it out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And you guys know the drill. You can listen to the show. Subscribe to it, of course, on your device of choice via your iTunes, your Google Podcasts, all that stuff. You can go deep into the archives. Our website, CME Group website. You can even go, of course, to our mobile app, get it all there. If you want to listen live, you mix it up a little bit. You may be saying to yourself, what's TWIFO doing in my live stream right now? It's Thursday. You're right. It is Thursday. Changing it up a little bit this week, and we'll see. Maybe we'll stick to this going forward. People seem to like it, but people do seem to like the Thursday side of the show. So maybe we'll do this. This also helps. It means you'll get the podcast on Friday rather than Monday, so you can get it and listen to it for a little bit of our look back at the week that's been going on. Of course, however you listen, live, after the fact, podcast, website, however you get it, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And joining me on the old program, let's go around the horn. We got a good group assembled today, starting off with my futures options compatriot, my partner in all things futures options crime, the yin to my futures options yang, if you will, the dark side to my light side. I'm clearly I'm the light side guy. Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here called QuikStrike. Mr. Nick, welcome back to TWIFO, sir.
I see. I'm self-muting, and I undid my microphone mute right now. It works. I can do it. I'm big enough to do it. I like it.
You're a big boy. You got your big boy pants on today.
Yeah, I didn't start talking while the little slash was going through the microphone. Good to be back. It feels like Friday though now, so maybe tomorrow I'll actually enjoy myself as opposed to dreading having to stay in the office till 1:30. So hopefully this is going to be a better time for me personally.
We don't want to cause dread. We want to cause fun here on TWIFO. The whole point of TWIFO is fun. We don't want you sitting in your office biting your nails, dreading the 1:30 mark when TWIFO comes around. We want you to look forward to it.
Too long a day. I'm ready. I'm ready now.
Then maybe you need to have a few beverages before the show just to get the old juices flowing over there. We'll see how you work. We'll work on your self-muting skills throughout the show. We'll see how that rolls.
It's gonna be good. You're not gonna even hear me chewing gum. I promise.
No gum, no peanuts, no chips. No chewing ice, none of that stuff. And then we'll see how it rolls on. Also joining me from his office, not too far from the studio. He was going to join us in studio, but last minute, I think staring into my cold, dark eyes scared him too much. He decided to stay back in the FTSE Russell offices. He is Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the show. Do I indeed have that right? Are you in the office down the street here?
I am in the office, and I'm down the street, and just other meetings have just kept me from getting myself over to the studio, and I apologize for that. But you know, I got to tell you, I was thinking Friday the whole time here as this all started, and just kind of set me back. Now there's another day.
Does have a Friday vibe to it, doesn't it? You know, maybe after the show.
Yeah,
here.
I had the whole Friday buzz going, and now not buzz going, but just. Excitement, but
we know
it's okay that we got another day.
We know what you meant. Well, the weekend starts early here with TWIFO now. That'll be our tagline. The weekend starts early with TWIFO on Thursday. If I didn't have more shows after this, I'd have to enjoy a nice adult beverage in your two's honor here in the old studio. But we also
don't let us hold you back.
Don't let us hold you back. There we go. Yes. And also joining us, holding down the CME Group hot seat this week, he is our old buddy, Mr. Uncle Mike Tusaw, formerly of RCM Wealth Advisors, still there, but now really holding down his own fort over there at St. Charles Wealth Management. Uncle Mike, welcome back to the show. TWIFO, it's been a while. And how's that CME Group hot seat? You know, we kind of updated a little bit. We added some spikes, a little bit more fire, so it truly is hot and uncomfortable. It's kind of like an iron throne now. So is it nice and uncomfortable for you?
You know what? I saw it, and I decided not to sit in it. I'm glad I didn't, because I didn't see all those bad things that you described. So I'm glad I decided to sit over on the bench.
Yes, we also offer a bench for our guests that are, shall we say, a little bit more timid than the rest. They don't call it the hot seat for nothing, listeners. All right, we'll get to it. And since Uncle Mike's joining us, we'll get to his area first. Last time he was on, longer listeners will remember. Long-winded, I should say, long-memoried listeners. Long-winded is me. Long memories, that's you guys. You guys will remember that last time Uncle Mike was on, he was talking about a metal we don't get to talk about a lot here on the show. It's one of the reasons I like to have him on. Gives us an excuse to talk all things silver, werewolves, hide your head, hide your silver jewelry, all the other stuff out there. We're talking silver a little bit. Gold gets all the rub all the time. And we'll get to gold in a little bit here. But we'll hit on silver, shall we say, the redheaded stepchild of the metals out there. It hasn't been a great week for silver coming into Thursday here. It's off about half a handle or so on the week, right around 1540 or so. That's right around 2.5% though, so not a bad percent, not a good percentage week here for all things silver. Before we get into all the other things, vol and everything else out there in Silverland, Uncle Mike, sir, give us an update first. What's been going on in your neck of the woods? What's going on? You have this epic silver collar going on, so give us an update on that. How's that been going?
Oh, I got even more than you need. There's even more. I have a silver conversion I'm even going to add to the mix today, Mark. You're getting more than what you bargained for by having me on the show.
I'm a little scared, but go for it.
All right. So there's three basic silver collars with which I have going on. One of them, it's a long-term one. I'm also on another show called The Option Block, which we've talked about frequently on that show, in that what we were doing is roughly about a year and a half ago, long-term silver play, SLV, we were using for this is where we were long the underlying, and we were able to actually buy a put option around at the 12 level for January of 2019. And we were able to sell a covered call at the 25 level for 2019 as well. And the concept behind it, and I believe it was at roughly 1570, now I think about it when we actually put this on, concept behind it was that we have almost double the upside potential than we do the downside risk. And it wasn't designed to be a world beater trade by any means. It was designed to just kind of have some exposure to precious metals and take advantage of the reverse skew that exists within the metals. And so with that, we've gotten out of the short call since then. And basically, silver, with the exception of the last few weeks, it really hasn't moved a whole lot. It's down a little bit since we initially got into it, but it's still far away from our protection levels, which we do see possibly rolling up in the near future. But for the time being, we're just going to kind of hold firm to where we are. It's a longer-term play. It's not really designed to be a lot of adjustments, at least as of now. Initially, when I got into it, I figured that I would be doing a lot of adjustments on it. And I remember Mark Longo and I were talking about it about a year and a half ago, saying, oh, this will be some great show content because it's silver. I'll be adjusting this thing all the time. And well, I think I've made like 2 adjustments in 18 months. It's the biggest disappointment for show content in the history of Mark's career, I'm convinced, or at least that's what he makes me believe all the time. And quite honestly, he's right. Also, another silver collar with which I have going right now is I have a 1617 collar designed to be a very tight conservative investment for clients. And we're well on the money with that. We're right at the point to where we're looking to close out the 17 calls with silver in the near future. Just probably in the next few days looking to close that out and either find another covered call strike price or just sit on it and then possibly have the upside because we're in we have a few months out before those actually come to fruition as well. The other silver that I'd like to talk about today from a strategy point of view is a conversion that actually exists on here. And Mark, you probably weren't expecting to talk about silver conversions today on the show, I'm guessing.
When I woke up this morning, I did not think silver conversions were going to be on my daily docket. That's why this show is fun. Always has surprises in store, sir.
Oh, you are in for a treat. So with this, I did it in a securities account, but this it likely could work with futures in some way, shape, or form as well, or the futures options as well. The skew that exists oftentimes within commodity options, or at least with silver in this case, can lead to kind of an interesting thing for a client. So what I did was I had a client that was looking to buy a CD. This was roughly 2 months ago. This was actually in April. They were looking for a roughly an 8-month time frame. And so with that, it was a few months ago when I put this on. A client wanted to buy a CD, and they wanted to know, well, these rates that the CDs have right now, interest rates have come up a little bit, but they're really still not quite the greatest. Is there anything that you can do? So I said, well, let me take a look and see if there's anything we can do on this. And they said, we're not looking to necessarily be long a bunch of calls and triple our money by any means, but we just want to beat a CD. Is there anything that exists with which you can do it? So after explaining to the clients that I can't make the same guarantees that a CD does, and just explaining that I don't have FDIC insurance or things like that to where this would be something different, I went through the scenario of a conversion. And this is what I had come up with. Now, at the time, silver was at $15.54. And what I was able to do is be long the underlying at $15.54, sell a January of 2019 15 covered call, and I collected $1.40 for that. So by doing that, $1.40 minus 54 cents, which is the amount with which it is in the money, that's kind of the equation with which I use. Excuse me. $1.40 minus 54 cents, that comes out to 84 cents of juice, so to speak, of extrinsic value that exists, meaning that if the stock or the underlying were to stay the same, then you'd have an 86-cent profit, or stay above 15 in this case. Now, with that, remember, I'm trying to do something to where you actually have something similar to something to where you don't have any principal risk, because this client is going to need this money shortly after January. And so if silver goes down, like it has, then this isn't going to work for them because of the fact that they can't lose any money on this. They're just trying to beat out what the interest rate of a CD would be. So with that 86 cents left that I have of money that we know we're going to have, we actually bought a January 15 put for 55 cents. And so by doing that, we create a conversion to where we have a 31-cent credit to buy silver, sell a covered call at the money, and buy an at-the-money put for a 31-cent credit. So that means that the cash outlay on this is 15 minus 0.31. Cash outlay is $14.69. And 0.31 divided by $14.69 comes out to 2%. Annualize that, that gives you roughly a 3% rate of return because of the fact that over an 8-month time frame, annualized, if you make 2% over 8 months, annualized, that'll come out to 3%. Now, 3% is obviously not something with which annually you're not going to retire off of that if you're putting your entire net worth in that, and you don't really have a big net worth to begin with, so don't get too excited. But the true excitement here that exists is the skew that exists within silver options right now, in that what I was able to do is come up with a virtually risk-free trade, and where the risk would come into play, there could be pin risk at expiration, should silver actually be right around the $15 mark. But so long as it is deep in the money or to the call side or the put side, the options will be exercised. One option will exercise and the other one will expire worthless. So the excitement that exists right now in the silver options, and this was a little over a month ago in terms of when I was actually able to do this, but it would have been probably about 2 months ago when I actually put this trade on. The excitement that exists in something like this is that you're able to find things like this and actually do things to help your clients along these lines and just provide a very unique service. I think I'm going to put a sign up on my office, St. Charles Wealth Management. We're the silver conversion specialists.
I'm going to say you should just call it the House of Silver Excitement. I think that's what you should call it. Uncle Mike's House of Silver Excitement. How does that sound?
Loving it.
Nick, are you getting excited?
I got a question. So what's the net? You said you're long silver, and I get to short the call and long the put, but you said a covered call. So is the cover on the long silver that you have, or
correct?
All right. So it's just 3 positions: silver, the call, and the put, right? Yeah, that's right. Because when you said covered, I thought you were going to a double long on that. Okay.
No, correct,
so.
Yeah.
All right, yeah, so that's interesting. And do you have the exact date that you did that? Because I'm looking at I don't see a 1554 future.
It was on SLV.
Oh, it was on SLV. Okay. Okay. Yeah, I'd be curious if you had the date on that. I'll build it.
Let me get that. I can get that for you. 1 second. Go on with the show, Mark, and I'll type it in the chat.
Nick, I can tell you're just bubbling over with your silver excitement now. See, it's fun to have different metals, different products coming up here on the old show. Can you feel yourself, even though it's not a Friday, can you still feel a little bit of that weekend excitement circling in there, Nick?
What did I text you? I texted you. The weekend is fast approaching. That's what TWIFO stands for on Thursday.
There you go. The weekend is fast approaching. There we go. See, we're full of all sorts of quality acronyms here on the show. Speaking of which, and speaking of acronyms and abbreviations, I'd like to mention at the top of the show, of course, you guys can follow along. Even though it's Thursday, you can still play along, of course, not just with the live stream, but over there at cmegroup.com/TWIFO, a.k.a. the weekend is fast approaching here on the old program. That, of course, will get you the same reports we're looking at right here, right now, as you can see, looking at silver. If you go over there, go to the product selector up there, the top right, or excuse me, top left of the page, you'll see metals there. Click on metals, then choose silver, and you too, excuse me, can follow along with what we're going on. If you did that right now, you would see that it was, of course, silver right around 1540 coming into the show, off about 2.5%. The vol popping up, as you see in there a little bit, so maybe some of that factoring into Uncle Mike's a little bit of juice he's getting there on that trade. And what was lighting it up this week were, if you said the 15 even puts out there in September, you would be at number one with a bullet. That was the big trade, at least so far this week. OI actually kind of light, only up about 1.5% out here this week. But the 15 puts, certainly where the action is, about 1,500. Again, silver a little bit lighter in terms of volume than out there in gold and some of the other products out there. So it's still interesting stuff out there. So 1,500 of those. A lot of them actually almost half coming up today. Nearly 700 going up today. So obviously we don't know the full OI because those are still going up today. The rest kind of scattered throughout the week. 16 half calls also doing pretty well this week as well. About 800 coming in number two. Also about 400 today. So a lot of action going up in silver today. Uncle Mike, are you trading? Are you slinging some silver futures options as we speak, sir? Is that you driving all this action out here?
No, I'm just staring at it go down right now and just thanking the good Lord that he blessed us with put options for protection.
Mr. Nick, sir, go for it.
Mike, do you think so? You're looking for it to slide lower. I mean, do you think the physical is a buy yet, or not quite yet?
Long term, I think it's a buy, but if you're looking to hold silver for the next 5 to 10 years, yeah, definitely it's a buy. I think it would be a buy anywhere down to 845 all the way, which is what its low was back in 08, all the way up to 20. But in the near term, I'm a little bit cautious on. I think the next level of support, if you were to try and get into it for maybe like a 1 or 2 year hold, the support with which I'm seeing on it would be the lows that it made in December of 2015, which would be roughly about another 8% lower, quite honestly.
Oh, really?
So I'd be very cautious of it at this point. But once again, I'm doing it more as a longer term play. I've been boring audiences for many years on my silver holdings. You can Mark can attest to that.
No, I'm just more. I like diversification in the physical product too. So I don't mind making purchases on the way down. But I didn't realize I hadn't looked that far back at 845. That's pretty significantly lower. But I would.
That was back in 08, but
yeah, true. So okay, that's I'm going to try to rebuild. I'm going to try to rebuild your trade in the futures and see what it looks like. And if I can put out something while we're doing the show, I will do my best.
I'll IM you the prices I got on it too.
There we go. A little trade building action going on here behind the scenes. Since we're talking metals. Let's also talk our old friend here, our usual stalwart standby on the show. The shiny stuff, a.k.a. gold, has been an interesting week out there for gold. All you watchers have seen, of course, dollar strength kind of weighing still on gold, as well as a few other macro factors, the view on rate hikes coming up, all the other stuff going on, kind of all combining for a little bit of a 1-2 punch on gold. Gold so far off about 1.5%. This week, which is right around 12.22 or so coming into showtime here. We talked a lot about gold vol actually popping up a little bit this week, which is probably welcome news for all things gold vol buyers. We know you're out there. You've been writing to us quite a bit. And in terms of OI, let's see out here, up nearly 4%. So a pretty active week for all things gold. And let's scan around here really quickly in the future. Before we even get to that, Mr. Uncle Mike, since you're our resident kind of metals head here, maybe that could be another handle on your business card. Also Silver Fun and also AKA #Metalhead. Do you? I know you like silver. Do you sling a lot of gold too?
I have. There's as a long-term holding, but I've definitely because of the the option premium that existed about 18 months ago. I've definitely, or the way that the premium was set up about 18 months ago, definitely more on the silver side of things right now, just because of the fact that it was just easier to set up a longer-term hold with the options than it was at gold at the time. But still own a little bit of it for some people.
Some people out there were slinging some gold today to the tune of the, or this week, I should say. Looks like the 12-20 puts, and I said we're coming in. Actually, I take that back. The gold bugs are out in force. A little bit farther out down the term structure, actually out to March of 2019. I said we're coming in right on 1225 into showtime, listeners. It's not stopping the gold bugs. They're back in action. March 2019, 1,500 calls. Number one with a bullet, 9,000. All of that going up today. Worth noting also about 5,500 of the 13 halves going up. So maybe kind of a funky ratio, 13 half, 1,500. Not quite 1 by 2, 1 by 1.5 or so. Maybe that's what went up today. Our old buddy and Mr. Nick, maybe he can parse the blocks. A lot of funky upside spreads going up. Maybe we talked about that last week too on gold, listeners. Also worth noting, a little bit farther out, listeners, we got the 18 halves, also popular out there. 2019 is where the action is. June of 2019, the 18 halves lighting it up, 77,000 and change. 3,500 yesterday, 3,100 today. The rest of the week kind of quiet. Closing a bit, only about 2,500 again. We don't know today's OI change, so that could change that. So 18 halves. In June, we got 1,500s in March of next year. Kind of an interesting story going on out here in gold. Let's just go a little closer to home. Let's see what we got here as well. If you're talking about front month AUG, it was the 12-20 puts where the action was out here in that month to the tune of about 6,300 so far this week. The lion's share also on Wednesday. So yeah, an active week, net opening so far slightly on the week, but interesting stuff. Nick, I know you're a gold man out there as well. First off, did you ever find out any more about that? Was it a funky fly? Well, it looks like that's what we had last week, but I remember it wasn't going up on your blocks. I think because actually maybe we'll table that because I think we have a listener question about that exact trade. And then also, what's catching your eye out here from a metals, vol, and skew standpoint this week, sir?
Well, the 1,500 calls were part of kind of an interesting trade here. It was 9,000 by 5,500. They reported as a selling the 1,500 strike. So 9,000 of the 1,500, 5,500 of the 1,350, which was comboed out with basically like a 1 by 3, 1,200, 1,250 put spread. So just kind of an oddball trade. So that almost seems like position rolling, or maybe somebody was trying to roll something they had up high down lower, and then they gave a kicker with some put spread ratio. But that's what I'm seeing. That happened today about 11:30. And again, people can go and take a look at all the blocks by going to the CME website and checking out the QuikStrike block trade browser. And in the near term, probably next few months, you'll be able to register for block trade alerts, sign up, and get emails every time something significant happens. You can set your threshold to make it be a quantity that makes sense as opposed to just all the little stuff. So in this case, you would want to see it because it was a pretty substantial trade.
Yeah, sounds like it. I didn't know you guys had the block trade. You guys have all the tools going up there on the CME site. So yeah, check out the block trade scanner. You guys have a lot of questions about the blocks. I know just from checking your mail, you guys do. Then head on over CMEgroup.com, look for the block trade tool Nick just referenced there. Is that the easiest thing to search for, Nick? Just block trade scanner or tool? What's exactly it's called so they could find it?
I'll tweet. I'll send you the link, and I'll tweet out the link right now, so this way everybody can have it. And but I'm gonna try to find where it is. It's Yeah, it's a longer URL. So I'll just go to it and tweet it, or I'll send it to you and you could tweet it out, and I'll also tweet it out. This way people will have plenty of different ways to take a look at it.
There you go.
But yeah, it's a nice tool. I mean, it does all of it, obviously does all the asset classes, and where we're going to be, and you could filter and stuff like that, and we'll be expanding so you can search and start looking for strikes and that type of stuff. But the cool thing is going to be, as soon as it gets approved officially, it'll be will be the alert system, so you can get emails and really again, like you said, we'll hold off on answering that block trade question from the board. We'll talk a little bit more about that later when they're ready to go.
Yeah, well, we can always table that question. It's a good question. We love when you guys have good questions. By the way, it is a lengthy link here, right? So we'll tweet that out for your listeners. We'll also put it in the show notes so you guys can find it if you're listening after the fact of the podcast. So you too can, in between shows, when we're not doing shows, you guys can search for your very own and see what's going on out here in the block trade land. Since we're talking metals, let me wrap up really quickly with if silver is the redheaded stepchild of metals, then copper is like the abused and neglected orphan of it's much more of an industrial metal. Doesn't get a lot of love, and certainly not getting a lot of love this week. I thought it was worth noting out here, just coming across here, that copper hitting a new low, a 1-year low actually out there in copper land. If I could pull it up, there we go. If you want to find the listeners in the QuikStrike, get out of the precious into the base metals, and you'll see copper up there as the first selection there. Yeah, hitting a new low for the SEP contract, 267.35 a pound. That's the lowest since July of last year, July 14th of last year. So again, things weighing on copper. You don't have to get in too much. Not a lot of options volume going up out there in copper, but worth noting. I know all you metalheads like to look at that one as well. It's much more of an industrial story. And again, that gets back to a lot of what's going on with Chinese demand. They're China, one of the biggest consumers of these things like soybeans and copper. And so if they're not buying, or if the tariffs are messing with that, that's going to gum up the works a little bit. Speaking of gumming up the works, let's move on to another product category that I think things have been quite gummed up of late, particularly if you're talking in the shale oil side of the fence. This is, of course, crude. It's been an interesting week out there for crude. Before we get into all the option stuff and everything else, Uncle Mike, I know you're a fan of a lot of the energy ETFs out there. I know you like XLE and a few others, are kind of the more broad sector type products. But you're a big crude watcher as well. What's anything been catching your eye out there? This kind of continued protracted crude drawdown we're seeing of late.
Well, I think the thing that of note, I'm looking to. I'll be honest. When crude was up around in the mid 70s, probably in early July, in hindsight's always 2020. I probably should have sold a few calls against some of the crude holdings with which we have, and some of them I'm just holding as long-term holdings nonetheless, because a lot of oil stocks do pay pretty nice dividends. But right now, with the pullback with which we're having, I think we kind of bounced off support a little bit. In that I'm just looking at the crude chart right now. Yesterday, the low of the day yesterday, take a look at that right there. Low of the day yesterday in the 66.29 mark. You could almost consider that kind of a support line if you want to use the resistance that was put in late January and late March. So the argument, if you're a technician, would be that crude may have just bounced off support based upon what just happened. Now, keep in mind, we have a lot going on in the macro levels right now that could affect the price of crude, because now we see that apparently Germany's getting all their energy from Russia, they say. We have, I could go on for a while on a lot of the things that are going on with world events. And if you want to just say something that is true at any stage of financial media between right now and the last 60 years, there's a lot of craziness going on in the Middle East. So you could just say that, and that's been true for a long time. So I think the main takeaway that I'm seeing with crude right now is that we may have just bounced off of a support level just in looking at the futures on it.
Nick, I know you're a bit more of a technician, I think, than even I am here. Are you buying? Are you liking this kind of bouncing off support levels? I know you've been watching kind of the crude drawdowns for a while. What's your take on what we've been seeing in this kind of protracted drawdown here, sir?
Well, I don't know that I'm drawing any lines and looking at stuff. I mean, I tend to think things more in the trade range that we've been seeing, and then checking that against the open interest, and then looking how the volatility is reacting. So, given, I think in the last two, I wasn't on last. Was I on last week? I was on last week. I wasn't on the week. I forget. That time goes by so quickly. Calendar gets X'd off as we go. We really have lost any volatility we gained when we had the run up, and then the initial spike down. That's kind of all been washed away. And I just don't necessarily look from a support standpoint, but we did bounce off. We didn't go through the 90-day moving average that I have in our charts, and 60 days crossing the 30. So we might see a little bit more weakness, but I look at it as we're just kind of trending back into the middle of a range, which makes things interesting from the standpoint that we can start looking at the skew and see that. I think we get in a range. You start to look at the vol curve, and it kind of tells you what people are thinking we're going to do. Okay, so from a support and resistance standpoint, I'm probably not qualified to answer that. But from looking at the futures and then seeing how we are sort of in the middle of this 70 to 75 range, and then looking at what the skew's done over the course of the week or the year to date, the calls are cheaper and the puts are more expensive. So I would say that there's generally a bias that we probably have some continued sliding to go on. And then I think that until we get into like a new part of the territory of a trading range, we're not going to. I think you're going to see vol get softer, kind of be steady. I mean, we're not at as low as we've been. But given we had a 2.5-3% move down this week, and vol basically did nothing, at least from what I'm looking at on the screen here. I'd say that we probably are sideways to sideways lower, just based on how I think the vol curve's pricing and where the open interest looks like. And like we say all the time, we use the open interest to try to find our support and resistance points. But that's kind of what we're seeing here. That's what I'm seeing anyway. Again, and you're talking to a guy that's just paying attention to what numbers that we're calculating and the screens that we have. I'm not paying too much attention to what's actually going on in the world of oil other than what I read.
You're a diehard technician. You're running Fibonacci all day. No, don't sell yourself short, sir. I know what you're up to over there in the dark bowels of the QuikStrike labs. But looking over here at where we settled out coming into the show here, right around 68 handle, off about 2 handles for the week so far here, which is a little bit north of 2%, about 2.5% on the week here for crude. So not a good week for crude bulls. We were just in the mid 70s not too long ago, and now about 7 odd handles shy of that as we see continued weakness. Part of that coming from EIA this week, a surprise buildup in crude inventories of 5.8 million barrels for the week going into July 13. Obviously, that's a lagging indicator, listeners. That was coming on the heels of a big draw of nearly 13 million barrels reported for the previous week. That was the largest draw since 2016 at the time. So come on the heels of that, analysts who watch these things were forecasting another decline of about 1.9 million crude oil barrels in the inventories. Instead, we saw a buildup of 5.8. So you're sitting on more supply. Guess what? That's going to weigh on the future. That's pretty much exactly what we saw out here this week. Looking at what else we saw this week in terms of what was lighting it up out here in crude land, number one with a bullet coming up here in the SEP contract. SEC, we said we closed right on 68, so threatening to the downside here. 65 puts, not surprising. Those are number one on our list here this week. 31,000 lighting it up. A lot of that coming up today. 11,000 and change going up today. 11,000 and change going up yesterday as well. About 4,000 on Tuesday, 4,000 on Monday. It's an active week on the 65 line as we continue to kind of move closer to it and threaten it over the course of the week. And then we drop off a bit again here for number two, the 64. So kind of a bit of a put strip. 65 puts in SEP, followed by the 64 pits. About 64 puts, easy for me to say. Right about half that volume, about 16K, 63 puts, doing about 14,000. Kind of a nice SEP put strip, kind of all the way down for the lion's share of our top five. Did get some 70 call action. They're kind of tied for number 5 there with about 11,500, kind of evenly spread throughout the week. So it wasn't all puts all the time, but it was a lot of puts going up out here. Just scanning as we like to do really quickly here to see if any funky strikes were lighting it up. If you are a gold bull, or excuse me, crude bull, and a little bit longer term, how's Dees 2020 par land sound in terms of the par calls going up in Dees 1,000 times on yesterday, which was actually net closing a little bit, closing about 500. So maybe someone taking off some par call exposure out here in all things crude. So an interesting week out here in crude. Things continue to get way down. These kind of surprise build up in the inventories took a lot of people by surprise, obviously coming in and hitting the futures. It'll be interesting to see as things progress. As Nick alluded to, vol still kind of coming off a little bit this week, even with some of the surprise developments we saw. It's going to take another good shock move to really kind of juice up that vol again to the next level. Nick or Mr. Uncle Mike, any last thoughts on crude before we move on into equity land? I can hear Sean gearing up. He's ready to go. So what do you guys got on crude?
Too slippery for me.
How long have you been sitting on that one, sir?
For about 12 minutes.
I now have to mute your microphone in disgust.
Please do.
I hope
please
you don't mind.
Yeah.
That's worthy.
I
of
deserve
that.
it.
Yes, you deserve that.
This weekend finger painting we have here. No, from my standpoint, you mentioned most of the movers and shakers in the volume and open interest, but I just continue to look at how the curve shapes itself up, and I just based on that, like I said before, it looks like people will sell some upside and buy some downside, and we've seen it switch around too. We saw it switch not too long ago. You can take a look at the quick skew, which I'll try to tweet out here right now, the 30-day and the 60-day quick skew, and you'll see that it's flipped back and forth. And I have a good picture here that I'll push out right now, so you can see that for a while. But when we were up in the 72, 73 range, the calls were bid, and then as things got kind of shot down, the puts got bid again. But I think you'll find this chart interesting. But go ahead and move on to the next topic. I'll get this one out there, and then we can address it if we have to in the listener questions.
Nick is the man with the data, the man with the plan here on the show. And the plan is, of course, to keep on rolling into the equity land. It's been an interesting week for equities. We talked kind of last show and the show even before that, kind of just the surprise rally we've been seeing out there in the equity markets for the first full week post-trade war. It really just was rally ho mode, kind of seen a little bit more mixed this week. Coming into today, the market's kind of a little bit up, a little bit down, a little bit mixed, kind of slightly down towards the end of the session here. But net on the week, we're seeing Russell, as you said before, this kind of bifurcation, this kind of breaking away of Russell, kind of continuing this week, net up about 15 handles out there in Russell land. So not quite a full percent, but pretty close, about 0.8% out there in Russell land, net up on the week. Vol also coming in, as you might expect, when you have kind of a net rally up there in all things Russell Vol. Russell Vol, of course, our good old RVX coming in this morning. It was right around a little bit shy of 14, about 13.8, probably come off a little bit intraday as well. VIX was right around the 12 handle. So you're talking about a 1.7, 1.8 spread between Russell Vol and the S&P Vol, aka the VIX. It was much wider last week. It was pushing a 3-point spread, so coming in a little bit, contracting on the vol spread side there as well. Usually when things get nice and wide, that's where we see a lot of nice trading between the two, between Russell options and S&P kind of E-mini options out there as well. People like to take advantage of that vol spread. As it's tightening up this week, we'll kind of see how that impacts the trading. Before I break down some more vol and what was trading out here this week, Mr. Sean, what's been going on in your neck of the woods? What's been going on now that you're a couple of weeks post reconstitution? What's been catching your eye? What are you hearing from the clientele out there as you're out there preaching the gospel of Russell options?
It's still just exciting times. This index is just tremendously outperforming large caps, and it's very exciting to see. And there's just a lot of attention given to the Russell 2000, given that same attention we've been mentioning for the last couple of weeks, Mark, and that's it's insulation from the trade war kind of discussion, and it's domestic in nature, and it's been just a tremendous performer. But again, from a derivatives perspective, the index rallies, option volatility comes in, but there's still lots of opportunity there to trade. There's just a couple of numbers for you really quickly. From the FTSE Russell world, there's $16 trillion benchmarked to our indices globally, and $9 trillion of that alone in the U.S. indices. But the reach of this product, of these products, especially the Russell 2000, and I'm talking futures and options, the reach is global. Every region within in the entire globe are trading these products. Every region, Europe, Asia, Latin America. So, yeah, this index is insulated, but there's a global reach, and that's very much due to the reach we have with our partner CME Group. So, very exciting times. And again, I think I mentioned this already, but it's just July 10th was our 1-year anniversary of transitioning this business, and we couldn't be more excited. But I'll leave the options talk to you and to Nick and to you guys to talk about current trading and things like that.
It's funny, whenever we talk Russell and any index, really, the story is usually front month, front week. That's kind of where all the action is.
Right.
The weeklies are where all the action is, right? And yet I'm looking this week, kind of an interesting week out here in the Russell options. It actually wasn't the weeklies. It was all the way out to September. About 20% of the flow so far this week going up in a September contract. Remember I said we came into the show this week, listeners, a little bit north of the 1700 handle, 1705. It's the 1490 puts in September. Our number one with the bullet trade out here this week. Lion's share going up, all of it pretty much going up yesterday, Wednesday. So someone out there piling into some 1490 puts in September. Again, listeners, that would be about a 210 change or 200 and change handle sell-off out there in Russell land for those puts if they are indeed buying for those to come in. Also worth noting, it was also 1520 puts out there in August, also lighting it up. So actually, I take it back. The 15-20 puts were slightly more, 22% of the action going up in the August contract as a result of those. So SEP 15-20 puts followed hot on its heels by the 1490 puts out there. I should say AUG 15-20 puts followed hot on their heels by the SEP 1490 puts. Coming into today, that's, if you had asked me what I expected to be the number one and number two hot options trades in Russell 2000 land, I would not have guessed those. So interesting. I'll have to dig a little bit and see what was going on, maybe with some of the, shall we say, more esoteric, funkier positioning going on out there in Russell options land. Nick, are these ones kind of coming across your radar as weird as well as when anything else catching your eye in Russell or in S&P index land, sir? Pick your index poison.
Well, just sticking to the Russell, I think some of the good stuff to talk about is the 7% increase in open interest this week, which again, any kind of increase you like to see, and some of the you mentioned the SEP, but what I tried to look at too was you see, the front weekly, the second weekly, they have some good volume, but then you have the September contract, also the December contract with some good open interest. And then the I'll call it the serial weekly. So the third week of August weekly, which really takes the place. It's a weekly, but it really takes the place of the August serial expiration. So, it looks like the OI is growing where it's supposed to grow, right? You're getting a lot of good action in the front contract. 1 day left. You had some good activity today, 2,000 contracts for the week in that front, and then volume of almost 6,000 as well this week and everything. So, and one thing we haven't mentioned in a while either is the puts dominating from a put call ratio standpoint, as you probably would expect in the index. But the big part of that domination is coming in that August contract. So you see like almost a 2.7 put to call ratio in that week 3 August contract. So good trends. We talked about this with some of the other CME products that don't necessarily have high open interest, but what you want to continue to see is the increasing open interest week over week. And I think that's what you're seeing. You're not seeing you see a little bit of closing that's in August, but that's probably just trade because that's the highest volume. But that's what I found to be sort of worth taking a look at. And then as far as and as far as the skew, we see we don't see too much. I think we just see things kind of deflate a little bit on both sides of the curve. If we look 30 days in, we see the calls less beat up and the puts less expensive. But as we go out to the end of month and then the September and the end of month September and the further dated stuff, you see that the skew sort of holding the investment skew that we see in the S&P. So I think we said it before. Last week we looked at the markets on CME Direct, and they all look pretty good and pretty tight, especially for the contracts. And that's where a lot of it's going to be, is the contracts inside of the 30 and 60 days. But I'm with Sean, and I'm hopeful for him. It's looking up, and they have to be happy with the increased OI, which for me is always an indicator of good things to come.
Yeah, it's been kind of robust every week we've been doing this. Uncle Mike, we've been talking a lot here on this show about Russell, and I know you're a dyed-in-the-wool kind of S&P index guy. That's where a lot of your bread and butter over at St. Charles Wealth Management is. So that's kind of where you're getting in. You're rolling your S&P puts, selling S&P covered calls, et cetera, so on. That's kind of the lion's share of what you're doing over there day in, day out. Has some of these kind of movements, and I know we've talked on the option block as well, you're kind of like a lot of people kind of fed up with some of the maybe macro trends driving everything out there. Russell, obviously, look at this week again, a little bit more insulated from those types of trends. Has any of that maybe caused you to start maybe sticking your nose over to the dark side, looking at Russell and seeing maybe if that's something you want to start trading options or underlying, anything like that, or you kind of maybe playing wait and see with it?
Playing wait and see with it, because one thing that just to add to from the movement is that tariffs do play a big role, or they can, the trade war can. In the long term of things, I don't think it's going to be a very big deal, like I've said for the last, pretty much since all this trade war stuff started. But in the near term, if you're looking to profit from something, you trading more mid-cap and small-cap companies, if you're a dyed-in-the-wool bull such as myself, might not be a bad idea to look into that, because of the fact that trade wars won't have as much of an effect on a lot of companies that are that size. Now, it can have an effect, no doubt about it, but for companies that aren't necessarily in manufacturing or things like that, that are smaller, maybe more of a service, then might not be a bad idea to take a look at it if you're concerned with the things that are happening in the trade wars. And to add to the movement, or to add to that, the movement on what you guys were just talking about, something to definitely look at. I'm looking at it, but I've not dipped the toe in as of yet.
You're a tentative fellow, but I know you'll dive into those waters. They're not quite as scary as they seem. What can be scary, I should say, and sometimes it's your mail, but we're going to dive into it anyway. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. You're a part of the show. We get to ask questions, comment. You guys got them coming in, all sorts of products and tools and areas, and you name it. I guess we probably could do an all questions. Maybe we'll do an all Q&A show. Those are kind of fun. Sometimes scary, but also fun, because you guys take us in some interesting directions. This is one I kind of alluded to earlier when we were talking about the blocks. I got this question from Daniel. He says, I saw what looked like a gold fly in the TWIFO report. He's talking last week. We were talking about this, listeners. You remember on the show about how there was one in their report, and Nick said he didn't see it in the blocks. Daniel goes on to say, but Nick from QuikStrike said he didn't see it in the block reports. Why is that? Are all trades not reported in the block trade reports? So, Nick, maybe some clarification here on what you saw there and what you were talking about when we were talking about that kind of out of the money. It looks like it was a gold call fly, I believe. It looked like it anyway.
Yeah, so the blocks are just one way to trade, and a lot of times people can arrange a trade with another counterparty. They have to announce that that's going to happen, and then if there are any other takers, then it might get split up accordingly. But typically, it's going to be done between two different parties, and they'll only have to be reported on the block. Those won't come across on your trading platforms, because what you're going to see on the trading platforms are the stuff that goes through electronically. So it's Globex is what you're going to see, that is the electronic trades, and the blocks are going to be a completely separate process that goes on in a separate reporting mechanism. That's why CME is offering the block tool. So you actually have more access to the blocks than you do to the regular flow. In order to get the regular flow, you have to be on a trading platform and subscribe with an FCM or bank, whatever. And the blocks, you can go to the website and see those trading. And generally, there's like a 15-minute reporting window, but typically people report them on the shorter side of that 15-minute window. But you see them and they pop up as they happen. So you get a better take of what's going on in the blocks. And if you go look at the metals, in general, there's a lot of stuff that goes on the block. So you can get a pretty good idea of where things are by watching the block ticker. And like I said, you should take a look at the tweets we put out because those are some good, easy to use tools. Also, in the near term, we'll be taking some of that block information and trying to help that augment our volatility calculations as well. So, as that flow and as that volume increases, that becomes a good indication of what the market's thinking and where volatility is going. And just to kind of finish up on that, they just started letting blocks happen in the ag complex. So that's been still small, but it's it's increasing week over week. And then there's always blocks in. Typically, there's tons of blocks in the energy. There's a handful of blocks in the indexes and the rates, and usually in the rates they're pretty significantly sized, so that's why it pays attention to keep an eye on that if you're looking for big trades that are occurring. And then there's not much. There's a little bit that happens in the FX, but not a tremendous amount. But the blocks are a separate venue of trade, same exchange, separate process than the Globex electronic trading.
We got time. We're up against it, but I want to be nice. Let's squeeze one more in here. All I got is coming up is option block after this. I'm going to be talking again anyway, so might as well keep the talking train rolling. Let's do one more here. This comes in from Yancy. I think he wrote in last week. We kind of touched on it a little bit, but I'm not sure if there is an answer to this. Maybe it might be worth exploring a little bit. It's kind of more of a thought question that comes from Yancy. He says, I heard it said that there are 20 active names and about 75 tradable names in the equity options market for retail, and that's really about it. How does it shake out in futures options? Well, on the equity option side, you're quite right. You might even be charitable with that 75 tradable. It might even be smaller than that. You're looking at the top names that are going up in the equity options world. You're going to see, your Facebooks, your Googles, your SPYs. You get your VIXs. You get your SPXs and a few others. And there's about 19 names that really account for about half of the flow on any given day. Sometimes fewer. So it is a very, very concentrated marketplace over there. And you get beyond that, you can trade in other ones, but they're going to be wider. You have to work them a little bit. So that number of around 100 quote unquote tradable names, that could even be generous. Might even be, I probably would maybe take it down a little bit, but I could probably work with that. But on the futures options realm, that's an interesting question. We touch on a lot of different complexes here all the time. We're talking metals, we're talking energy, we're talking, ags and equities and all these things. But across them, which ones are active and stuff. It's kind of an interesting, I don't know, it's kind of an interesting thought question. So I'll toss it open to all of you, whoever wants to dive in, Sean, Mike, or Nick, if you have thoughts on this. And Nick, I know you have some data to this effect, so maybe you can back up your argument a bit. But it's kind of an interesting thought question. Anyone have any suggestions for Yancy here?
I'll jump in first. As far as tradable names, there's not really a natural relationship between those two things, right? So how does it shake out in futures options? There are 42 sort of very liquid products that are on a CME. Well, 42 might be generous. So if you go look in the asset class listing of the CME, you'll get there's 42 that have that are good, consistently made markets, and that's kind of how we judge the historical data that we capture. We're looking at the ones that are available, trading, liquid, all that kind of thing. There's obviously a smaller universe of products there's a huge universe of futures products, but a smaller universe of things that people pay attention to. That's why they call them the benchmarks, right? So how does it shake out in the futures? I think for the retail, there are certain things that they probably would be comfortable trading, and that's part of the reason why they introduced the minis to get more activity that way. And I think you might see that they might go even smaller, where I know that some exchanges down, like in South America, they have micros, and they're even smaller contracts, and that's been the growth in the micros amongst the retail is just, somebody showed me a chart the other day. It's been hugely steep in the growth there. So there's you got 6 asset classes. You probably have 4 or 5 products per asset class that are pretty good markets, very liquid. So if you do the math there, that's 24 to 30. Then there's, like I said, we cover 42 historically, but there's 25 to 30 that you really can get in there and probably, get a good market, get a good price off. Probably less than that, but that's what you can look at and see what you're comfortable with. And if they start adding micros in some of these products, I think you're going to see that increase even further.
How did I know the man with the data would have a decent answer for that one? Good thought question, Yancy. Maybe we'll put it to the folks at CME as well and see if they have some interesting insight into how they view that question, because it's a bit of a subjective one, but an interesting one nonetheless. Unfortunately, that music means we've gone long, but we love talking this stuff. You guys like listening, so we'll keep going. But unfortunately, we got to bring it to a close. If you're listening live, now's your chance. Go hit the bathroom, take a break, get a beverage, come back in about 30 minutes because option block's coming on. That one hasn't changed times. At least not yet. We'll see. Maybe we'll look into that too. Let's mix everything up here. Confuse the heck out of everybody. But it hasn't changed quite yet. But before we go, let's go back around the horn. We'll start with our guest. He's been squirming in the uncomfortable hot seat for an hour, so we'll let him go first. Uncle Mike, if I am intrigued by your silver collar and all the stuff you're doing out there in the metals land, or maybe in the equity indices, I want to learn more. Where should I go? What should I do?
Well, I'll tell you what. Go to my website, www.stcharleswealth.com. In the coming weeks, I am actually going to do a seminar in my office on the conversion itself. So if that's something that excites you and intrigues you, come on out to St. Charles and learn more about it. Also, I still have my deal going to where if you visit the St. Charles Wealth Management Facebook page, and once I get 100 likes, I will post a video of me doing the worm.
That's alternately intriguing and terrifying on both fronts. The silver conversion and indeed the worm. I don't know which is more terrifying to me, sir. I guess I'll have to check them out and see here for myself. And Sean, you guys are cranking away, doing all kinds of interesting stuff out there in FTSE Russell land. If you want to check in about all these numbers, you're talking about how much is benchmarked to FTSE. I know you guys always have a lot of interesting data and research coming out as well. Where should we go? What should we do, sir?
FTSERussell.com is the place to find all of that fantastic information about our indices. But CMEgroup.com is probably a great home to talk about futures and options on futures. And, as Nick brought up, we're at record volumes and open interest, which is very exciting to see. And 140,000 plus contracts a day in the futures, and it's just a great story, and it's exciting to see the growth.
There you go. And while you're at it, give them a follow over there. FTSE Russell, FTSE Russell on Twitter, so you can see all that stuff coming out. They're tweeting out about some interesting data on fossil fuels in Ireland. So you never know what you're going to get. FTSERussell.com, on Twitter or FTSERussell.com to learn more. And last but not least, Nick, you talked about the block tool. We talked about the OPEC watch tool in the past. Of course, we've always got the QuikStrike. Head on over to bantix.com, BANTIX.com, to kick the tires and light the fires on that one for yourself. But Mr. Nick, what else you guys got up your sleeve this week?
Well, we started to mention it a few weeks ago, but it's now out there. Our QuikVol tool now has in probably, and I mentioned the 42 products we're covering, 42 benchmark products in QuikVol, where you can download historical volatility data, historical realized futures volatility from the beginning of 2007 to present. So that data is available as part of QuikStrike. Also in QuikStrike Essentials, the free version, you get a little sneak peek from a chart standpoint. Then you could also download that data or get a subscription and chart and see all of that data right within the user interface. And it's also available as part of CME DataMine as annual subscriptions as well, where you can purchase by asset class or for the entire set of 42 products. And then, as we mentioned, there's lots of tools out on the CME Group website that are free, cmegroup.com/QuikStrike. And if you ever want to know anything specific, or you're looking for questions to, or looking for answers to some of your questions about what we do and what we cover, or if you're a user and you need anything, you can always tweet us at QuikStrike1 on Twitter, or go to the website and shoot us a note there at Bantix, BANTIX.com. So lots of good stuff coming. Going to have a good quarter of releases. Look for that data to get popular. And there's ad hoc purchases as well. You want 3 months of history, you can go in there and purchase 3 months of history. It costs you a few bucks. It's a pretty slick tool, so have a look.
There you go. Check them out, bandtix.com. Give them a follow as well while you're at it on Twitter. QuikStrike. Remember, there's no C. QuikStrike1. QuikStrike1 on Twitter. For all these, he's tweeting out data just during the show. You can see how much he's doing all week long. So if you like that data on those charts, you want to stay on top of those tools, at QuikStrike1 on Twitter to learn more. And on behalf of Nick and Uncle Mike and Sean and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. If you're listening live, stay tuned, get a beverage, hit the bathroom. Be back in about, Uncle Mike and I at least will be back in about 22 minutes to talk all things option block. Otherwise, you listen to the TWIFO. We'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.